Sales of Amazon's Kindle devices were strong through the holiday season, but an analysis by StarMine says the company could still fall well short of earnings expectations for the quarter. I'm joined by Sri Raman, Senior Research Analyst with Thomson Reuters StarMine. So Amazon reported strong sales of Kindle devices. I mean, I know a lot of people that got them. So why are analysts worried?
In fact, Amazon is also expecting record retail sales online. So the reason why they are actually suffering is because of their margins. They've seen a lot of margin pressures. One is, of course, they have the free shipping promotions that they're giving out. So they're taking the cost of shipping on themselves. That's helping them beat out most of their competitors, the smaller competitors who can't afford to do that. And the second is, of course, the Kindle and Fire. They're doing fantastic. We hear about sales of over a million of units sold every week.
Every week in December 2011, right?
Exactly.
Crazy.
But those are very low margin products. They're not making money on any of them. What they're hoping to do, at least this is what analysts think, we actually rate analysts. We rate analysts based on how well they've done in the past. And the best analysts say that even though they're selling record number of Kindles, they expect that the clients eventually would want Amazon to show that translate into sales online.
And isn't that starting to happen, though? I mean, we have seen, you have one 5-star analyst from McAdams, right? Reagan out there that's worried about the margins. But, I mean, it's the razor blade theory, right? You sell the product, you lose money on the device, but you're going to make up for it in selling books and magazines and movies. And isn't that happening, or is it not?
It's happening, but the question is, how long is that leash that investors have? Are they going to give them a long enough leash to let Amazon let these razor-thin margins go through and then see the higher margin online sales later on? We're not so sure that that's going to happen. At least that's what the top-rated analysts say. The leash is getting shorter, and Amazon needs to start converting a lot sooner to continue to have investor confidence.
When you get beyond the margin issue, do analysts, you think, believe that Amazon has the right products to take market share from Apple's iPad?
They do. They're actually quite happy with Amazon's mix. They actually seem to say that they will eventually translate into online retail sales, and Amazon is trying to build out the whole environment. So as people get the Kindle, they'll buy more products from Amazon down the line, which are much higher margin. So this was the right move for Amazon. The question is, was the price point too low? They didn't want to compete with Apple on price point, that's for sure. The perception is the iPad is a much superior product. In terms of for the price point that it's at. So Amazon had to have a much lower price point, and that's where they're getting hit now.
It's a really interesting story, especially when you see them all around. We'll have to wait and see what the earnings deliver. StarMine, Sri Raman, thank you so much.
Thank you.
I'm Jen Rogers. This is Reuters.